All right. So, next one I want to talk about is Roblox. This is a super interesting stock. Um, I've already kind of broken this down once, so I'm gonna delete all this, but I want to leave most of that there, just to say, look at that rotation that went through there. How many times have I talked about this? 'Cause this is what we're always trying to find. We're trying to find stocks that go sideways for an extended period of time, and then we want to sit there and we want to wait. And we want to set alerts for this right here, alerts for this right here, and we wait for one of those things to break. Specifically, we hope for this to break to the downside, and then we hope for that punchback inside. Because we know that when we disperse down, we break the wall of buyers that were waiting there, they lose, the sellers win, they send you past that resistance. If you were to say, find some level footing and reclaim that floor up here, that punchback is going to result you in an easy target up here. I'd say that's where you're going. Um, the first target would be the middle line or our cost basis between the two lines. So, when I go to draw this box down here, I'm looking for spots where the buyers sent it up and the sellers said no over and over and over again. Looking for spots where they just said no, 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 not an inch higher. And when the sellers sent them to the floor, the buyers said, all right, let's get this thing going. We're not going any lower. So here's the thing about Roblox. There was all this empty space that was left up here. When we IPO in, when was this, 21, March of 21, and investors get super excited, they pile in, and they end up sending this thing to a ridiculous $142. But when they dump very fast, months leading after, um, you create all this open space. So here's the way that you can catch this trade. Step one, find your box. What I saw here was sideways action, and I just knew that one day that sideways action was going to break. And what I'm looking for then is like points of contact. So there are multiple right ways to do it, but the way I like to do it is just go off of what makes the most sense. So I'd say right about there. And what I'm using beside that is where we first opened there, and then it was held how many times? Once, twice, three times, four times, five times. And I think there's multiple right answers to where that ceiling should be, because you also have, look at that monthly wall that was held up there, where this one rejected, this one did. You've got a lot of, if you counted them out, it's 1, 2, 3, 4, 5 times as well. And as far as like which one is the right answer, I don't know. It depends. It's on a case by case basis. But what I think right now is I like I like this box, and I found it there with the top points of contact, the last wall right before the open space, and the most bottom floor. You could say, well, there's actually maybe less points of contact here on the one that I chose as opposed to this. And yeah, you'd be right. But the reason I like this one a little more is because when this comes down here, I don't really love where the 50% is at. That line moves up, but I prefer it down here. I just think it looks more representative of this pile of volume as a whole. That's more in the middle as opposed to up here. So how do you make money on this? Because that's the question in every single one of these. Well, you set alerts and you walk away. You got this sort of seesaw motion charted up. You're just waiting, because we know in any of these situations, it's just going to do this for as long as it wants to, and it's not really your business to be making a trade off. Now, I mean, there are rooms here to make money, right? So you could say, why not buy right here? And yeah, why not? I mean, once you see this already represented, this box forms, and you create all this open space right here. Find your lower entry target and take a chance. Take it from the bottom to the top of the box. No reason you should not be doing it, if it makes sense. And the things that can make it make sense. So this is the Monday the 25th. That is what are we? How many Septembers ago are we talking? I just got this for a second. This is what we're dealing with. So how could you make money off of this? Well, we know where the open space is. Just drawing there, and it's above right there. Now I'm going to use something else to represent it. This box. That is our ceiling. And the first box that pops out to me is this one. And if we go left, see that it was pretty successful if you want to take a trade based on it. This is your last little thing that you need to claim. Get going and get out of here. It's a wonderful stop loss if you decided to go long. The contracts, if you're looking to play options, would have had to be multiple. You don't have this huge run up to November 8th, and we'd be looking at about a month before that. So there would be a lot of room for options plays there, maybe even just to the 50% here. But if you're one of those guys that just wants to take shares, you absolutely can. The thing I drew earlier where the rotations, the question is why not just take a play here, make good money, and then sell, try to do it again. And it's like, yeah, honestly, why not? Not enough people trade like that. They're always looking for the big one. That is a very, very profitable way to do it. And what you can do is you can find these smaller, on the larger time frame, like we're looking for this huge run up, right? Like we've done there and we did there, and we're looking for it again. So now you can use this lower time frame, sorry, and that can be claim the 50%. You seem to hold it, take a shot. Your stop loss is either, and you can take whatever one fits your risk level, but you can either use the 50%, say a formation below that, I'm out, or you can just use the floor. Because there are instances, rare, but I mean, it will come down and try the floor and reclaim the 50%. But you could have really used the 50% here, and that's it, cost basis, and you would have done very well. So that's just a trade within a trade, but there's something a lot better here most people will never see. And what I can tell you is it's very easy to see. You just have to want to look for it. So that's the first resistance I see to my left. Somewhere around. Okay, maybe slight wall at this first open month of November after IPO. But regardless, I gotta get rid of this. Excuse me for a moment while I clean up this mess. What we got to the left of this is a whole lot of open space. So we know that when this finally pops and this wall breaks, we get a monthly that forms in here. We know a pretty good high percentage play that it is going to fly to its first resistance. Usually pretty fast because it's open space and that's how we came into it. But it will get there. It'll get there because, well, we had this giant consolidation, this grabbing of lower averages for long-term investors. And what happens is all these people that are short, they're like, oh, this is the easiest play ever. It always goes down here. So they load up millions short. And then they do it again, and they do it again, they do it again. And eventually they lose. And one of these monthlies, as we're going to see, is going to form above where they were short from. Just give it a second. Catch up to what I'm talking about. Bam. And what's cool about that is, after what we just said, there was a moment there where forming at the top, those shorts could have made a lot of money once again. But the second that end of the month comes, now they are all losing money instead of making it. That's when a short squeeze is going to happen. Because now you formed above your average, you're down on your position, And these guys are like, well, we're out, we're done. What are they forced to do now? They got to go bet up. They got to go buy shares. And that's when you get a short squeeze. And it's more than just a short squeeze because this isn't like, I mean, I think it's those properties are definitely existent on this trade for sure. But the main thing is happening. It's just people are getting low averages, course of time, and they're ready to take this thing up. The company starts showing promise, you're getting green earnings, and eventually all of this has to fill. So you can actually make a really cool target here. Just saying, all right, what are we working with? If that's the floor, either that is the ceiling or that's the ceiling. I'd choose to go about there. What I'm looking at there is the ceiling there. I like where the 50% is at, and I feel quite good about this being the floor. That makes sense. So at that point, you're just holding. Now, if we did experience some turmoil in this 50%, what you can do, or sorry, this open space, what you can do is use the 50% and say, this was my ceiling, now it is my floor, which is why that's there. This is my ceiling, that's why it is there. And there is a sort of respect we should see to this 50% here. See, that is a really important area, lining up pretty perfectly with the first all-time low that they had. We are sped up. Well, you're going to see that they run right up to that ceiling and reject. Most people at this time, they're going to be making dumb decisions. They're going to be like 3 red months in a row. Their run up is over. They're going to be thinking, oh my gosh, maybe something like this. They're going to be, oh my gosh, this stock's going to nothing. And where you'd make that mistake is not knowing what to look for. We haven't lost our ceiling yet. There's no reason we should be panicking. And what happens is we find support right around the floor, right around what this weekly box is right here. Going off of candle closes, it's right there. Regardless, there's some volume here that is found, and it shoots you back up towards your 50%, towards your cost basis. And when you clear it, now we're moving to the ceiling. Now, making a new high, we're in open space, and the rest is just typical. You notice you run right up to your target, then you break through and get that all-time high. And that's a phenomenal trade. I mean, you could have easily been logging low averages down here, taking 300% in shares. Talk about, I mean, you could do leaps too, and you'll make a killing, but 300% in shares, very doable. This is something that you can use on your long-term accounts. You can look for these pockets of open space, and you can maybe do something with it. What I'm looking at right now, and it doesn't totally fit that vision, is I'm looking at this company, PL. I think it's interesting for a number of reasons. One, just like this means nothing. This is the worst financial advice, which it is not, that you're ever going to get. But I was typing in Palantir so much, and one time I was just, oh shoot, I didn't mean to put in just PL, and found this guy. I did a little bit of looking into it, and they produce satellites or something about them being cost effective. Who cares? Who cares what they really do when the chart looks good? That is the most important thing here. And I gotta say, I like what I'm seeing. Oh, I haven't even seen what they did Friday. Well, I really like what I'm seeing now. They have earnings on this Monday, so it's gonna be fun. And anything can happen. But what I'm looking at specifically is like the last one, open space at very keen, very specific areas. So the monthly, I'd honestly be real with you, is not the clearest chart. What I can see is this the spot here where we first said no. We said no several times after that. and that has kind of became a somewhat floor, not quite, but a somewhat floor. So if we're just looking there, I like where we're holding. I like how we're trying multiple times to get going here, once, twice, three times. And now, right as we come to earnings, we're kind of sitting on that floor, that launch pad. So what do I really want? I want to buy this and walk away, which I've done in several accounts. My game plan here is simple. I like what we've done and what we're holding above, and I like that I looked it up for 20 minutes and I heard the word satellite and I went, ooh, it's like a couple of years ago and it was like, oh, you a little bit of stock and then you just see semiconductor and you're like, cool. And a couple months ago it was AI, cool. And then a couple of years ago, what, electric vehicles? Like there's always one. And I don't know, satellites seems fair. Can I be real with you? You might have to come down again. Now, that is possible. I think it's less likely because of where you're holding. But if we did bad on earnings, I would 100% see that move down to roughly whatever bit of volume is sitting down here. I'm not going to chart that out until it's important because right now I think we're going up. But that is definitely possible. And if it does happen, I'm getting 50% lower averages. And yeah, a lot more gutsy to take it down here, but take my chances because what I want to see one day is that to get reclaimed, that IPO price from 21. And the reason I want that is because there's something that happens in these long-term building stocks when they reach their IPO price. It's like they they started here, the original investors were here, and then it was just absolute hell for how long, and the stock just gets beat down into nothing, and then it starts to do something right, and those investors return. It goes once, goes twice, maybe it'll come down, one more time, and eventually it will. And people can disagree with me, but I think eventually it will reclaim this IPO price. And when it does, it means a lot that investors have overtaken this, journey to decide that it is again worth this price. So most times you're going to see something crazy like that, And if that were to happen, that would just be the start, and I would have an average $6 or $3. What happened? So that's why I'm looking at this. That's why I like it. Yeah, and I'm just going off of what I see on the chart. Really cares what they do, but satellites sound cool, I guess. None of that is financial advice. It's where my head's at. It's what I've been thinking. And if you notice, there's a little bit of something to go off of in here. So, roughly, I want to go with that as your 24-hour ceiling, and then I think I'd be comfortable with that as my floor. And I was loading down here the last 2 days, and what do you know? Day before earnings, we've closed much higher. So, predictions, I would say anything can happen on earnings. You typically like, look at this one. It clearly was a mover last time. And what did they do? Yeah, it seemed like they did good. I don't know. I usually don't put a lot of stock into this kind of thing. No puns there, but I usually don't. I'll play this kind of thing. It's not mine. But what I will say is that it is totally possible that this stock rockets on Monday on good news, and because of the open space that's back here and a bunch of little rocket launchers over here as well, a little gas to put on the flame. These spots where sellers have won, you reclaim those. That's pretty good movement, and that's all open space. Really no resistance till whatever this little pocket here is, starting at like 920 up to like 950. So yeah, honestly I kind of wish I took a speculative little options play on it. Excuse me for a moment while I look up what they priced in as. Because something like this it's just high high reward on like literally no risk, depending on what these are priced at. None of the big money is deciding that, all right, yeah, this thing is gonna do $3 jump on earnings. But you know, local retards like me, I will say something. All right, just for so whatever you're thinking. So you could take $8 calls for they were going about $20. It's actually not great. I was thinking that was going to be a lot better, but oftentimes you can find these opportunities and it's like $5-10, especially because this stock is getting beat down the last couple days. Um, but like $20 is about what I've seen that $8 call. Now here's a 950 that a few days ago was $8 or $10. A $9 call that you could have gotten that same $10 entry. So there's a lot of room to make money with this kind of thing. Again, because you grab these at $20, 10 of them, you hit. You went from 200 to 2 grand. Run that trade over and over again. So this is also this is also the way that you can hedge really, really well. You could have said to yourself, all right, $200 the upside, and my downside target would be like the middle of this 540, so $6 puts for earnings. $6 puts, which priced at around $40. So if you're doing 200 upside, maybe you buy 2 puts. And what often happens is for you to be wrong about the upside, the earnings would have to be so bad. And what would happen is you'd fly through here, claim the inside of this box, probably bounce off the ceiling. And in all likelihood, because you're moving that hard, you're going to retest that. So your two $6 puts are worth, I don't know, like $2 in the money. So that's $400. They're 200 a piece. And you spent what? 300 on the trade, so you make sizable little $100. You do that at scale, it's extremely profitable, but so I'm not gonna inflate the numbers though to make it make sense. I think the lower increments are so much easier to understand. So yeah, that's a little fun one. Again, we'll see what happens Monday. I'm not crazy about the earnings, but what I am crazy about is the long-term vision, and all that's going to be is just holding above this monthly area for as long as possible. And I'm long above this. I'm long for a while. As long as we keep trending up, which we have been for several months, then we can do whatever the heck we want for then. Give me a lower average, and I'm gonna keep going. I bought on all my accounts. It's gonna be a fun one. None of what I say is financial advice. I literally don't go to college. I do this, so I am not a professional. That is what that means. Didn't go to school to be good at this. I do it on my own, in my own way. So I'm super lucky that I found people online that knew what the heck they were talking about. I learned to do it their way. So if you're ever interested in learning to do it their way, try to post. I'll be a little more informative in these, but the GOAT Potter Stocks you can find on YouTube. It's way better to explain it than I am. So got a bunch of these all logged now, like all ready to get posted. I've been cranking them out. I just haven't uploaded anything since the first one, but I should be able to do multiple a day now.